Welcome back to the Eric Krown crypto channel. Wishing you a happy and healthy start to this nice macro lazy Sunday over here on a pretty much holiday weekend as we prepare for a very long-term price analysis for Bitcoin and by extension the rest of the cryptocurrency market as well. We'll even be looking at some traditional market stuff here too. So other than that, if you're interested in the short term, yesterday's video is still very much valid in that sense, and it's there for your viewing pleasure whenever you so desire. Other than that, I wanted to once again ask, what exchange are people using? Because if it's not these four exchanges over here and 30% of people are choosing other, that is very, very interesting. So we want to be adding the trade journal to the most used exchange so that you can just import your trades there, make it nice and simple and easy, and can have it all in one place. And so yeah, just let us know, in the comment section below, what exchange are you actually using? I see a lot of people actually using KuCoin, which was kind of a surprise to myself. I forgot it honestly even existed. Other than that, I wanted to once again aggressively show my Instagram. Just been doing a lot of Bitcoin short form updates there, as well as other things, of course. And it's a good place for me to kind of, if Bitcoin were to move today, to kind of get a quick little update out if the market requires it. And there's of course a link in the description below as well. Other than that, let's just jump right into it right on off the bat. Should we start it off with the best case scenario or the worst case scenario? Let's start it off with the hopium. How about that? So here is what I believe is the best case scenario. Yes. So Bitcoin, this is a monthly chart, obviously, so very, 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 very long term. Ultimately, have we seen the low as of right now? I do think that it's incredibly unlikely. The reason why I say it's incredibly unlikely from a probabilistic standpoint is simply due to this chart over here, and that is a function of the interplay between the accumulation distribution indicator, as you can see right here, and essentially the macro look on the monthly for this asset going all the way back to the genesis. Basically, anytime that we've seen a macro low, or the only times ever that we've seen a macro low is when the accumulation distribution indicator comes down to this green horizontal line on the chart that my cursor is currently on for the moment. And as you'll notice, with the last month that just closed, so we're into July, we're in the future now, it definitely moved, it definitely moved down, but not that much. Definitely not enough to make me think, oh, this is it, or this is probably it. In this case, I think best case scenario is probably more reasonably close to September open, and perhaps even, could take even a little bit longer than that. Now, of course, if let's say this month of July just absolutely falls off a cliff, I guess it might be possible. It might be possible to get relatively close to this green horizontal line. But I think, again, a little bit more reasonably after August, early or into September is probably the best case scenario for even hitting this line. What you also notice here is that even just by hitting this line on the macro scale, as you can see going all the way back, while that is the low, that is quite literally the low, it's not when things actually start to turn back up and, more importantly, get exciting back onto the upside. In this case over here, for example, in 2015, it took from January 2015 lows for Bitcoin to actually really break out and, start to move outside of that accumulation range until November. And things didn't even retest the prior all-time high until 2 years after that, really, in basically January of 2017. So it can take some time. Same thing over here in 2018 low. Again, calling the lows in November, obviously, but it still took 1, 2, 3, 4, 5 months to kind of break out of that accumulation range. And, this was a macro range yet again, but I would say that it kind of did retest the prior all-time high right here for, on a closing basis, to be fair. Other than that, what I'm trying to say is that we're probably in for a lot of waiting, again, in the best case scenario. So the best case scenario as far as what the chart would, potentially look like is maybe something like this. So we kind of know, or it's not that we know, but looking at it from a statistical standpoint, it's a lot more likely that Bitcoin does at least have one more try lower. And I would, kind of posture anywhere around the 0.5 fib here on the macro scale, which is about 15,200, or let's just say mid $15,000 region is an area of interest right there. At least for a nice bounce. It doesn't mean that it's going to be a macro low, but probably a nice bounce. So ultimately, I would be looking for, if that were going to play out in a nice manner, which maybe does, maybe doesn't, is that you get a quick spike down there, trade back up to the top side of the range, which, by the way, the top side of the range right now is a cool about $23,500. So or 20, did I say that right? Yeah, $23,500. I drank coffee for the first time in 3 weeks yesterday, and it's like, didn't sleep. So that's why this analysis might be a little bit, maybe a little bit more difficult to follow. Apologies on that. You also notice that's that's pretty much right around the 382 in this case as well. And of course, the 0.5 fails, maybe the 618 is going to be another area of interest for it, at least a nice bounce or something like that. Anyways, if Bitcoin essentially were to trade sideways in this range between, let's say, $23,500 and $16,000 to the downside, basically until end of year, yeah, that would be really, 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 really good for probably putting in a macro low and giving another try back up north of $30,000 into 2023. And then, well, hopefully you don't get something like this where it trades up and then slam it down, which that would be too brutal for even me. I mean, maybe it doesn't need to go exactly that far down, but I guess when we talk about the worst case scenario, well, we can get to that actually at this point, I suppose. So that is what I believe the best case scenario is. I think based off of what we're going to speak about in next year, it's a little bit less likely, but also to kind of corroborate that story for, likely a monthly bounce coming in relatively soon, which on a monthly scale, again, would probably be like September-ish, let's say, September, October, maybe, is this chart over here. I haven't brought this out in a while. We charted this one out. This was back in April, in March of this year, 2022. And basically what we noticed is that on the tether dominance chart, it was putting in a massive ascending triangle, which is one of the only formations I'll ever call out, ascending and descending triangles. These actually do seem to work out pretty damn well. And there was an implied target based off the breakout of that, which obviously happened in May, and we've gotten pretty close to the target of it, but I suspect that it probably does have one more run in here. So if we do see the tether dominance chart move up to that intended target, maybe even overshoots it as well, traditionally speaking, this is going to play opposite of Bitcoin. So how can I show you that so that you can see for yourself? Well, you can obviously just use your eyes and, a little bit of this action over here, but we can do it together as well. That's fine. And what I'll do is I'll just put, I'll put this chart over here. Oh, and they don't want to put on the other side. Anyways, you can still kind of see over here that yes, on the macro scale, as far as macro trend goes, the two play opposite of each other. For example, this one's making its highs right here. This one's making its lows right here. High, low. And over here, a little bit of a high, a little bit of a low, and just straight down, wall straight up, and same thing over here. There was one instance, however, that I should say, just for full disclosure, don't want to paint a one-sided view, is throughout the period of basically, 2020 to 2021, they were both kind of moving up generally together. And I kind of mark that off as due to, the markets basically just maturing and having more people involved. So, the tether dominance kind of needs to grow to reflect the fact that, there's just more tethers being introduced in order to support the market, which brings up a whole nother dynamic, which, the old tether fudders can speak about, which I know nothing about. So I will get off that topic myself. It's not for me to speak about. Anyways, and I don't even know if really truly anyone fully understands it. So maybe it's best that we just leave it to destiny right there. Other than that, I wanted to get back into this chart actually, which is the fundamental chart. So on the topic of this, we've also seen an average correction actually every time that the accumulation distribution indicator comes down to this green horizontal bar marking the low from the time that it actually turned red, which was back on over here, for example. Or can you see? Yeah, you can see a little bit. This is actually 2014 right here, turns red. From that period down to the actual low is what I've been measuring. And I've found that on average, 1, 2, 3, maybe even 4 over here, there's been an average correction of about 4. Dyslexia speaking in that case, 61.34%. So that's an average correction. Average, again, does imply that there's going to be some variance in those numbers, and it could be a little bit more, it could be a little bit less, and even 1-2% creates a massively different price. For example, right now I've forecasted what pretty much exactly or as close I could get to that average would be from it actually turning red, and that would be actually your mid $15,000 number. So we do see that kind of pop up a few times now, or a couple times at least. But the thing is that if we were to even have like a 63% correction, where would that put Bitcoin actually? If I could grab it, there we go. 63 puts Bitcoin at 14.5. 65 puts, or let's go down to 70 now. 70 puts it at 12,000. 75 puts it at 10,000. You know, it can obviously get much worse, but that would be the average in this case. And, you know, maybe a good value area long term. I don't know. Again, one of the things that does kind of bother me about the macro here is simply this. I don't feel like we felt true panic just yet for like for, you know, the people who have been here for a long time. And when I say a long time, at least from 2017 now, I guess those are kind of OGs, I guess. And definitely the people who are before 2017 who got in back around 2014, 2015, you know, it's more or less a question of, it probably comes down lower, but you know, it's going to be fine. And long term, I do think it's going to be fine, actually. I don't think Bitcoin's like dying or anything like that, but, you know, it's a consideration to be made to entertain the idea that, you know, it's not unheard of for an asset, any asset for that matter, to, you know, make a parabolic all-time high and then trade sideways and down for like the next 5 to 10 years. I mean, this is kind of like the going rate in traditional markets. In Bitcoin, you know, we have a bit of a different setup. But for example, I wanted to bring out this chart over here. Where is it? There we go. And I want to bring you over to SPY. And this is going to be the S&P 500 on like the macro. We're going all the way back to 1871, 1871, like not even 1971, 1871. This is kind of insane right here. But ultimately, what we can see here is that, you know, in the humongous long-term corrections, which I do think it's, you know, it's very easy to make the case that we might be seeing one of these. You know, these can take 10 years. For example, here was like the roaring 20s, right? Where SPY made its highs in 1929, so right before the Great Depression. And then it took about until, Jesus Christ, oh my God. Okay, this is too much, man. It's too much. 1954 before the prior all-time highs were tested. Even, you know, in between there, I mean, this was quite nasty and choppy, to be fair. So do we have another example of that as well? Yeah, we do. Right on over here, 1968. So this takes you, or kind of, I guess the high was in 1973, but same idea here. It doesn't really retest that prior all-time high until the 80s, the early 80s in this case. And I would argue from a macroeconomic perspective that the 1973 high over here has a lot of similarities to what we're looking at right here. One from a technical perspective and two from a macro perspective. The macro perspective is inflation was rampant, blah, 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 geopolitical issues, all this stuff. And from a technical perspective, which I'm probably better to be spoken on, you know, you do see a bearish engulfing on the 6 month right here. Doesn't happen all that often. It's really only happened 2 other times in history. Oh, what do you know there? Where's the other fucking one, huh? 1929, the great, you know, the top of the roaring 20s, right? Same thing over here. And then other than that, there's literally, to my knowledge, no other bearish engulfings. Now, correct me if I'm wrong. The problem is that most people like will call something a bearish engulfing, and it's not, and it drives me fucking wild. But I've gone through it with a magnifying glass many times at this point, and I still have not found one. Now, that could just be the lack of sleep from last night talking, but in this case, you know, do we have a bearish engulfing over here? Yeah, we do. This last 6 month, which just closed a couple days ago, traded above the high of the prior and closed well below the low, the actual wick low of the prior as well. So I do look at this as, you know, a long-term correction quite likely here. Not only that, but we do have regular bearish divergence on the 6 month chart. When was the last time that happened? Oh, what do you know? Fucking 73. It had multiple drives over here, so maybe it's not as bad, but we did see more extremes over here as well. And what do you know? In the actually, no, we did not see bearish divergence in 1929, but we did see a head and shoulders on the RSI, which actually I don't really care too much about head and shoulders on price action. I do on the RSI, however. So, you know, do you see these things kind of pop up here? And then also the jewel is not in the most comfortable of places, let's say. And so we'll just leave that in that case. So why am I bringing this up? Why am I even spending the time to talk about traditional markets? Well, it's because all these markets are kind of correlated with each other. And here's the thing. What I believe, and it's not just like me believing this, I didn't think of this idea. This is thought of by many people much more smarter than me, but I agree with it when I think about it, and it is this. What happened over the past couple of years, since 2020, since March 2020, the old Rona dump right there, is that the Fed turned on the money printers and basically kicked the immediate effects of a likely recession down the road. And we're kind of down the road now. And this may well very be the first time that we're gonna have to deal with like legitimate issues in the world. There's also a potential, like there is definitely a small war going on right now, which is kind of a proxy war for potentially a world war. What happened in 1929, or what was that setting up for? Not so long later, there's World War II. What about in the 70s? Well, that was a Cold War. What about over here? I mean, we kind of have like Cold War number 2, proxy war number 2, basically. And to put it into perspective, despite this rather nasty downside thus far, which off the highs is about 25.5%, we're still 64% above the COVID lows. So if you're looking at it from that standpoint, from a macro analysis standpoint, it's like, all right, the Fed basically kicked the can down the road as far as when a recession was probably going to happen. Obviously, we're basically getting one right now, which is kind of, it's not kind of funny. It's just like, well, because the reason why I say it's kind of funny, honestly, is because the Fed was like, no, it's not a recession. Like, we're not even thinking it's going to be. It's like, just like inflation's not going to be a problem. And then they come out later and they're like, well, now we understand that we don't understand that much. And it's like, man, it's in one of the few cases, it seems like the people on social media seem to really get this one right. And I don't know, the Fed, like they obviously knew these people are incredibly fucking intelligent. So you have to just wonder, like, why do they have these ideas to begin with? But I would have a hard time believing that they didn't actually know. Anyways, so, would it be reasonable to correct back down to those levels? Yeah, I mean, definitely possible. Again, when we go back to, the 08 crash, when we go back to the 70s, that 73 high and the macro high in 29, Bitcoin, S&P 500 corrected down to, at minimum, the green moving average here, which is the 55 exponential. 2 out of the 3 times, the only prior other times really, it corrected deeply below. Now, I hope it's not that I don't think like this would just be too nasty to deal with over here in the Great Depression times. But of course, in the 70s, pretty much just a little tap, just a little love tap, and then up, nice and painless kind of for the next almost 10 years. And then same thing over here in 08, right? Where it wicks down and, just a quick little 6 months below and then straight up basically after that. So, what if this worst case scenario happens? And again, this is like worst case scenario. I don't know if this is going to fucking happen, like obviously, but I do think that there is enough data in the charts to be reasonably like looking at stuff like this. What would it mean for Bitcoin? Well, if these markets are going to continue to be correlated, obviously not fucking good. Like, at that point, I don't think that what I see a lot of people postulating as the potential macro low, which would be somewhere around like, somewhere between like 12 and 14,000 is what I typically see the most on social media. I think that would just be unlikely. I think it'd be a lot more likely to come down into 4 digits, probably more close to like $6,000 to $8,000, let's say. And when we look at Bitcoin's 6-month chart, which again just closed as well, bearish divergence. Again, it's a little bit too early to kind of fully analysize something like that. And this is a 6-month chart. Nothing of this is likely to happen anytime soon. Although, that basically takes us from now until the end of the year. But bearish divergence, I typically do look for a target down to the 21. And in this case, the 21's $12,000. So that is a reasonable target as of right now. This is obviously a high right here, a couple of shooting star dildos plus a closure below. So that kind of confirms it as a macro local high. The question is now, do we get lower lows? That would be very, very nasty. On top of that, we also closed, or Bitcoin closed, all markets closed, a quarterly. And that's, I think best case scenario, like all of the hopium in the world, I would be happy to sell anyone a 30,000 strike call for any price that you want. Maybe not, but because you never fucking know. I don't know, maybe Tether does implode and then you just get some out of nowhere. But I would happily take that bet. Very fucking easy to hedge. This is not financial advice or anything like that, but in the next 3 months, highly doubt Bitcoin will see anything even north of like $28,000 to $29,000 on a closing basis, on a higher term time frame closing basis. So what does that essentially mean for the long term or even the short term here? I mean, I think best Bitcoin does to the upside is honestly like 23 and a half, if you will, basically for the reasons stated in yesterday's video, which, yeah, I do think that there's going to be a bounce like relatively soon, maybe this week, definitely possible this week. We do have a Fed meeting on Wednesday, I believe, so that's going to move markets as usual. But ultimately, this is more likely to come to the downside than not. Again, we've already kind of played out the easy bearish divergence targets here. And we're already at the lowest levels on quarterly RSI as is the monthly RSI. And I keep on seeing this on fucking social media. It's like, it's the lowest RSI ever. That's not fucking bullish. That's not a good sign. Like, it's not. It's really not. It's lower than it's ever been. It's like, what fucking world is that good? It's headed towards the bearish control zone. Like, that's not a sign of strength for the long term. I mean, shit, we can also bring it over to this chart as well, just kind of corroborate the story that, while there's very, very likely bounces, big bounces in between, there's never been a macro low ever at all whatsoever without seeing the monthly stochastic momentum oscillator, basically turning up for one, and then two, like preferably being somewhere, below like 35-ish region. These have all been macro lows. This was March 2012. This was June 2015. This was April 2019. These weren't like the low lows, but these were like the turn up from the lows. So it was still within the accumulation range is what I'm trying to say. So basically, it's reasonable to, again, continue to look for downside pressure on the monthly until that at least starts to show some signs of lessening, which as of the current moment in time, the only way to cross it up coming into this next month of August would be to close above 37,400. I think that's insanely unlikely. I think, again, best case scenario is maybe like September, and that number should move down significantly to reflect that, if it is even going to be possible to begin with. So, well, I guess it's always possible, but probable in this case. Other than that, I'm probably talking way too much at this point. And again, I'm only speaking about what I believe is the worst case scenario, which I believe is probably somewhere around like $6,000 to $8,000 for Bitcoin. I mean, obviously the worst case scenario is zero, but I don't think that that's happening. But $6,000 to $8,000, I mean, that would certainly be fucking, I'd be panicking. It's too much. It's too much. I mean, that's like what, a 90% correction, something like that. Yeah, about 90% to 74 to 7,500. So again, I'm only exploring in this video the worst case scenario and the best case scenario as well. What most likely happens, I think that's going to be a lot more clear as well, one, after this Fed meeting coming up this week, and then more importantly, probably sometime around like September or such. I think that the best case scenario is still viable. It's still relevant. It has not been completely invalidated just yet, so it's worth talking about. I don't mean to scare anyone unnecessarily here, but ultimately, with the way that these quarterly and 6-month charts closed, I do think that it's reasonable to entertain these ideas, because as of right now, traditional markets and Bitcoin are obviously correlated. We had a liquidity bubble, and at some point they may very well decorrelate, hopefully for Bitcoin's sake, sooner rather than later, because I do think that traditional markets is probably going to go down more. And I don't know, maybe that reflects like a real war going on. Who knows? I don't know. It's not that I don't know. I mean, I definitely don't know, but the thing is that I don't want to be using, are we going to use charts to predict like a world war? I mean, or maybe a changing world order. Maybe this is the time when the BRICS nations, Brazil, Russia, India, China, and then I don't even know what is S? South America or South Africa. I don't fucking know. See, I'm American. I don't know. I don't know these things, but maybe the changing world order actually happens, and America, as number one in the world, starts to fall back, and then China, Russia kind of take over. That would also, cause traditional markets to come down. Maybe we see decorrelation there. But ultimately, the dollar, Dixie, which I'm still very much bullish on, closed a quarterly and a 6-month time frame above our breakout levels. And we were looking at this as very likely to break out much prior to this. I still think that this trades much further up. 110 minimum, probably more like 120. It's certainly not uncalled for in the coming, couple of years. The reason why I say that is for the same reasons that I've been saying for the past, it seems since basically January 2021 to July of 2021, which is, hey, what do we have over here? The lowest BBWP reads ever, accompanied by hidden bullish evidence on the quarterly right here, plus a higher low, plus just an overall reversal. So ultimately, I do look for this one to trade higher over time. Anyways, I think that's a good place for me to leave off on this video. Again, I'm not trying to scare anyone out there. I just want to be giving my views to what I think is a more educated community here that can handle these sorts of things, especially, you know, because I think most fair weather people, they've already left. And yeah, just something to, you know, a bit of food for thought. Other than that, I'm signing off for now. Take care, much love, and see you soon.